Welcome to the Daily Update, where I'll go over the action in the market for Friday, July 14th, and then we'll see how things look for Monday, July 17th. We had kind of a sleepy day, not a real surprise since we saw a pretty good run-up earlier in the week. To see Friday kind of slow down a little bit ahead of the weekend. We didn't really drift higher, we really didn't drift lower. We're working off a little bit of our short-term overbought condition, but there's still more to go as the market tries to figure out, do we want to go higher? Do we want to go lower? We still have that longer-term overhead resistance above both the NASDAQ 100 and the S&P 500. We'll have to see if the market can get up enough steam to break above that, or are we going to shift and go back down and turn into a more negative posture? So let's go back and talk about what happened. We had a higher open with prices climbing slightly above R1 at 45.22. Then we fell back down to the unchanged level, which acted as support. As the day went on, we rose back up to R1. We fell back down to the unchanged level again. Prices did stay positive for most of the afternoon until we fell below and then closed below the daily pivot at 45.06. We were down 0.1%, so virtually unchanged. Volume was actually average. It picked up a little bit, but is still not really advancing. The technicals are still positive. Our backdrop is still positive on all time frames. We still have some overbought indications, but at the same time, we're also coming off showing some pretty good momentum. What are some comments that we can make? There was positive news. We had bank earnings came out that were taken as positive, upgrades from analysts, economic reports seemed friendly, but the market really had trouble advancing. It could have just taken off and gone higher, but it just seemed a little bit tired in Friday's session. Small and mid caps did lag in Friday's session. Fed Governor Waller came out, who is a voter, and says that he sees no reason why the Fed should not raise rates in July and that 2 more rate hikes over the next 4 meetings are likely. That rained a little bit on the market's parade. On a short-term basis, we still have the CMB composite, the moving average study, the CCI 14 and 20, the Stochh RSI, the Williams %R, standard deviation, stochastics, and RSI. We had a couple of things fall off, but it's still a pretty long list. Intermediate term, the balance of power, the PMO studies, our oscillators are improving, but still showing some negative divergence. The Sean trend meter, the BPI, both on the S&P and for the NASDAQ 100. The dollar was up and interest rates were up, which also provided some headwinds for stocks. We still have the yield curves that remain inverted. Sentiment was unchanged at 80, where it's still extreme positive. Our trend is positive, but with the slight down day, the green line is turning down a little bit, but both the moving average and the ADX are above 20. For right now, I'm keeping our bias at positive even with the slight down day, and I'm keeping our momentum at positive as well. Looking at the economic reports that came out, consumer sentiment, the preliminary reading came in at 72.6, higher than the 65.6 they had expected. Last time it was at 64.4. If we look back a year ago, it was at 51.5. Import prices were down 0.2%. Last time they were down 0.4%. If you take out fuel, import prices were down 0.4%, where last time they were unchanged. Export prices were down 0.9%. Last time they were down 1.9%. If you take out ag products, export prices were down 0.9%. Last time they were down 1.9%. Year over year, import prices are down 6.1%. The last time they came in at an annual rate of minus 10.7%. Export prices are down 12% year over year. Last time it was up 18.6%. We did get the consumer sentiment reading where it did show some improvement. That's the blue line. And we also compare this to the 2-year Treasury yield where they tend to go in the same direction. They are kind of resuming the same overall direction, but there's still a really wide spread between the two, even though it did decrease slightly. Also, looking at U.S. import and export prices as indexes, when we take them all together, we are showing a decline. Some IsabelNet.com blog charts where we're seeing a week ago, this purple line, that's where folks were thinking that interest rates would be. They've actually risen up to the yellow line to what they think they will be now. We're looking at equity fund flows for the week. We have solid blue bars here, so that means there were inflows, and the 12-week moving average continues to advance. Looking at the index return, if you just take Meta, Amazon, Apple, Microsoft, Google, Tesla, and Nvidia, we're up 58%, where overall the S&P is up 16%, and then the remaining 493 companies in the S&P 500, they would be up 5%. Looking at the buyback authorization, it's still suggesting that a lot of folks want to buy back stocks. And this is what a company does to help improve their balance sheets and make their earnings look better. So there's real incentive for them to do this. Looking at the cash allocation, we're still below average overall. A lot of folks are starting to put their cash to work. When you take discretionary investors, that's who can pick and choose, decide when to get in, when to get out, and compare that to the ISM manufacturing, the green line is showing that folks are getting a lot more optimistic, where the purple line continues to decline. So there's a little bit of a disconnect there. Market breadth, percent below 52-week high. This is the S&P index less the median stock. It shows that we're negative, but we are showing some improvement. Looking at our charts and analysis, where we had a higher open, we got up to R1, broke a little bit above that, came back down to the unchanged level, bounced back up to R1, came down to the unchanged level, actually hit the daily pivot, bounced up a little bit, and then trailed off a bit going into the close and closing just about on the daily pivot. The intraday chart, we were pretty much flat in the initial overnight session. We saw some improvement in the pre-market session, and then we're trailing off sideways as the markets close for the weekend. Large cap growth and value, where we see value slightly outperforming growth. And on a closing basis, though, growth was up more than value for the large caps. It was down less for the mid caps and down a little bit less for the small caps. Here's the S&P growth to value ratio. We're above the dashed line here, so that's positive, where we shot up and then spent the rest of the day coming back down. Looking at sentiment, this is the active asset managers. This is a week or two old, and they're pretty optimistic right now. We're breaking above 90. Our Ulcer Index is suggesting that there's not a lot of fear. It's kind of the same old story here. We declined a little bit with the VIX on the line chart as well as the bar chart. Volatility is pretty much going sideways, even though it decreased slightly. We're still watching this. We're coming back down with our VIX to S&P 500 correlation. We're going to see, is that going to be more of a negative thing for the market, or can it turn into something positive? The equity put call ratio continues to decline as the moving average is catching up with the movement up in stock prices. And we're still declining with our longer term equity put call ratio. That's positive. We saw a little bit of a tick up with this fear chart and a little bit of a decrease in fear on our other fear chart. Folks are still favoring a risk on posture. Our advanced decline line turned down a little bit based on price, but overall have been showing some strength and some real improvement. And we can say the same thing with volume. The new highs are still outweighing the new lows, but not enough to really turn our 5 period up, where our 10 period is going higher. The advanced decline ratio ticked down slightly, but is still positive. Accumulation distribution also ticked down slightly, but is positive. We saw a little bit more weakness with the cumulative advanced decline line for the NYSE, where it fell, and a little bit of a tick down with the NYSE regular advanced decline line, but we're still above this upward sloping trend line. When we look at common stock based on price, a little bit of a tick down as well as volume. We're kind of matching this previous high based on price, where we continue to lag more based on volume. Looking at our advanced decline line studies, we tick down pretty much across the board, but we're still above all of the moving averages. Our trend, the ADX is going above the moving average. The green line is on top, but it's starting to roll over and it's above 40. Our short-term chart is also suggesting pretty much the same thing. We picked up a little bit on volume, but we continue to be below average overall. Our short-term chart, not really anything decided in Friday's session. We might have some overhead resistance if prices try to go higher. And then on the bottom, you can see where the bar shows that we were just about on the moving average. Our 20-period double and triple exponential moving averages continue to look more positive. The 20-period exponential moving average is rolling over after being extreme. The same thing with the 50-period moving average. We turned down just slightly with the 200-period moving average. The boom indicator, after giving us an extreme reading for the 20 and 50, are now starting to come back down. The CMB composite still can be considered extreme positive, but did tick down slightly. The CCI 14 and the CCI 20 both declined, but they're still extreme positive. The Stochk RSI also ticked down, but is extreme. The same thing can be said with the Williams percent R. Extreme positive, but it did tick down. The stochastics in the short term are starting to roll over, but they're still extreme. They're still going higher in the intermediate term and are extreme. We're trying to turn back up, and we were already still extreme at the long-term stochastic. The force index declined a little bit, but is still positive. Our intermediate term charts, the balance of power is still extreme, even though it ticked down. We're still above the 50-period double and triple exponential moving averages. So far, the market is holding up. The go-no-go system remains positive with the darker blue bars. We're still up at the highest high measurement here, suggesting good momentum. The TTM squeeze has the lighter colored blue and is showing some improvement. We're still in the third standard deviations on this chart, suggesting that we're still overbought. The ease of movement continues to bounce up after it had come down to 0. The PPO studies are still positive across the board. The Erin indicator ticking up a little bit with our oscillator. The buyers are still in full control and the sellers are decreasing slightly. The S&P McClellan oscillator, after almost getting extreme positive, has ticked down, but it's still positive overall because we're above 0. So when we look at our summation index, we're still advancing based on price and volume. The NYSE McClellan oscillator also ticked down, but is still above 0. So the summation index for the NYSE based on price and volume continue to advance. The Swenlin trading oscillator looks positive both based on price and volume. The Elders impulse system for the S&P continues to be positive. The PMO is trying to turn back up, but you could say it's extreme positive, but we're looking better based on price and volume. And then looking at our PMO studies, we are turning down a bit, but we're still positive here. Tick down slightly with the buy signals. We're starting to get extreme with the PMOs that are above 0. But that also suggests more broad participation within the S&P 500. The parabolic SAR remains positive. The slope is now turning back more positive. The MACD is also turning more positive. All of our oscillators are showing some improvement, but we're still looking at this possible negative divergence. The Sean trend meter is still extreme positive. The BPI is starting to get extreme positive, but did advance. This is also suggesting more broad participation. The NYSE bullish percent index is improving and advancing. The Chaikin money flow, this is a little bit of a concern. It's still positive, but we are dropping off. We saw that on Thursday and Friday. And again, this tries to measure institutional buying and selling. Are they selling into strength? The Chaikin oscillator is declining, but still above 0, so it's positive. The money flow continues to be above 50 and advance, where the ultimate oscillator ticked down, but is also still above 50. The vortex continues to be positive with the green line on top and advancing. On balance volume ticked down a bit, but is still positive. The RSI, we're also watching this negative divergence here, where we're coming back down on the 14 period, but we still remain extreme positive with the 9 period RSI. The Kopit curve is now generating a buy signal. We saw a little bit of a tick down with our 200 period moving average study as well as our 50 period moving average study, but overall they've been showing some real improvement. And here's a look at that same chart also showing the improvement. I don't have any Fibonacci or line studies now. We're in no man's land for right now. Our different charts, the Heikin Ashi remains positive, the Kagi is positive and pointing up, the Renko is positive, and the 3-line break continues to be positive. Our different indexes, the equal weight ticked down and still continues to underperform the S&P. The equal weight did outperform a little bit in Friday's session, so we saw this coming up, but the big stocks have really been outperforming. Looking at Dow theory, where we came back down again with the transports, where we still broke out above this previous high, we ticked down a little bit with the utilities. Looking at our transports to S&P 500 ratio, it is declining, but overall continues to advance. And the Dow and the transports are pretty much even with how they're performing. Looking at our discretionary and staples equal weight study, we came down with discretionary, up a little bit with staples, so our ratio ticked down a bit, but we still continue to be in an uptrend. The Dow really didn't do all that much. It needs to break above some of these previous highs to really start to show some improvement. The diamonds, though, still remain positive. The NASDAQ is still dealing with this R1 level. We were able to get above it, but we closed down below it. and we're still above the 61.8% retracement level. We'll be keeping an eye on that, and the longer we stay above this, the more likely this may act as support if we start to fall. The cumulative new highs, new lows for the NASDAQ, turning up just a little bit, but are still weak overall. Our indicator, when we take the new highs minus the new lows, is still positive. The NASDAQ 100 is still above this previous high, also dealing with a resistance level where we opened up a lot higher and then closed right back down at R1. The Qs, though, still remain positive, and we're still looking extreme positive with the NASDAQ 100 bullish percent index. The small cap index did have kind of a difficult day. It dropped back down, but we're still above this resistance level right now, which if we come back down, it may act as support. The RSI is starting to come back down after it had been extreme positive, but the MACD continues to be positive. The small caps for the Elder Impulse system have switched to neutral, and the small caps continue to underperform the S&P 500. When we compare small cap growth to value, it ticked up just slightly. It's still in an overall uptrend. The mid caps also came up to this R1 level and then have fallen back. And so the Elder Impulse system has switched to neutral. But when we look at mid cap growth versus value, we actually turned up in Friday's session and are showing an overall uptrend. Looking at the home builders, also continuing to go higher. We ticked down a little bit with the ratio because the S&P ended up being down, but the relationship between the two is very strong. We're not really seeing any divergences right now. If anything, this is a convergence that they're confirming each other's strength. The dollar index did finally close down below 100. Then we're also dealing with this resistance level going back to the all-time high for the FANG index. We broke above that, but then we closed down below that level. When we look at a broad range of the S&P 1500 and compare it to shorter-term bonds, stocks continue to outperform. We're seeing also outperformance with the 3 to 7 year bond ETF. The tech sector continues to outperform bonds, and value continues to underperform growth. Keeping an eye on the financial sector, we were up slightly and we're still above the 50 and 200-day moving averages. We turned down just a little bit with the financials compared to the S&P, and we ticked back up a little bit when we look at the regional banking ETF and compare it to the financial sector, but it's still in an overall downtrend. The only real chart to show you right now is keeping an eye on this 3-month yield that goes back to where we were at in 2007. We continue to go up. What we're going to be watching for is if we start to fall, is that generating some kind of a warning sign? Our long-term charts, we're still positive with the daily special K, and we're turning back down slightly with the 150 and 200 simple moving average study. We're still dealing with this resistance if we go back to 2018, which actually goes back further than that. We haven't really decided if we want to break above that or if we're going to break down below that. We're seeing pretty much that same thing with the NASDAQ 100. We did go above it for a while, but then closed down below this resistance level. When we look at the NASDAQ 100 to the Dow ratio, we're still getting a very high reading. Other times, that's been pretty ugly for the market. We're wondering if the same thing will happen this time. An update of our possible positive scenarios. We saw the Qs outperforming the S&P. Some improvement with discretionary to the S&P. Large cap growth is outperforming large cap value. So with our growth to value ratios, the large caps, mid caps are improving. We're pretty much flat with the small caps. The S&P to utilities ratio continues to advance. We're still above zero with our 5-period moving average of the highs minus the lows when we take a broad measure. And when we look at the 10-day moving average of the S&P highs minus the lows, we're still camped up above 90. The longer we stay up here, the more it looks like positive momentum. The 50-week exponential moving average of the new highs, new lows continue to advance. The indicator continues to be above zero, and the red line is what we use on the previous chart. That continues to advance. But this is another concern. We turned up a little bit with growth versus value for the S&P. We're still in an overall uptrend, but we have been really going down overall. The staples to the S&P 500 ratio continues to decline, which could be continuing to give good support to stocks. So what's our outlook for Monday? We are positive, but still dealing a lot with this overbought condition. We'll have to see if we work more of that off. If it really starts to work off, then we'll try to evaluate, are we turning more negative, or are we just going to work this off before we get set to go higher? We're also coming into a seasonally weak time of the month now. The economic reports coming out on Monday will be the Empire State Manufacturing Survey. We're keeping an eye on all the geopolitical events, but the markets are fixated on inflation and interest rates. Here is the calendar for the upcoming week. We're getting retail sales on Tuesday, and then another important one will be the LEI, the Leading Economic Index. That'll come out on Thursday. We won't be getting any economic reports on Friday. Then these are the speeches. They both happen on Tuesday. They're both at 10 a.m. One will be given by Michael Barr. The other one will be given by Michael Gibson. Here is the Stock Traders Almanac statistics for Monday, where we tend to be neutral to positive with the Dow. We're actually negative with the S&P, and we're neutral to negative with the NASDAQ. So we're seeing different readings here. We will be on the 10th trading day of the month. This is where we tend to top out sometimes and then start to show some weakness. So we'll be looking for that possibility. We're also coming up to the mid part of July for the NASDAQ, and we tend to see some weakness after that historically. The scenarios, we're not going with the downwind yet because our technicals are positive, even though we're still dealing with this overbought situation. We're still leaning to the positive side, and in the intermediate term, we're still slightly overbought. We're not going with the neutral or sideways trend right now because the ADX is showing that we are in a strong trend. So our warning signs, the long-term signals that we've been dealing with on the weekly charts, we don't know if that's signaling a top or not. We have to watch that work out. The oscillators are still diverging negatively, but they are showing some improvement. The VIX is still showing that there's not a lot of fear. We're keeping an eye on the S&P to VIX ratio chart. The cumulative new highs, new lows for the NASDAQ continue to show weakness. We're still above that level that we set back in 2007. We'll be waiting to see if we end up dropping below that. The S&P growth is showing weakness even though it's still in an uptrend. And then we have earnings season that is really going to start to get underway. The longer-term positive seasonality and setups, those are still in the background. So that's a positive thing we can hang our hat on for right now. The Special K daily chart is positive, but be aware that the weekly chart is still negative. The long-term equity put-call ratio is positive. The S&P is still above that downtrend channel upper line. We're still in a risk-on posture. The transports are showing some improvement, but we've now seen 2 down days in a row. We want to see if some strength can come back into the transports. Lower price levels so far have been providing support. We really haven't fallen all that much, but so far, as long as we're above those support levels, we can say that support is holding. The S&P is outperforming utilities. The NASDAQ 100 and the NASDAQ, they are above overhead resistance. Can they stay there? But then they're also dealing with some pivot level resistance as well. Can they get above that? The Staples to S&P 500 ratio is declining, which gives good support to the S&P. The small caps continue to be showing an uptrend with the Russell 2000. They haven't generated a cross yet with the S&P small cap index, and the mid caps continue to show more strength in other areas of the market. Small and mid cap growth continue to be positive. And the Copic curve has now generated a buy signal. So what's our conclusion? The S&P remains positive, but we're still dealing with possibly being overbought. We could still go higher from here, but we're going to become even more overbought. Or does the market want to work off some of this overbought condition before it gets sets to go higher? But if we work off too much of it, we're in danger of turning more negative. In the short term, we're positive, yet we're still overbought. The same thing can be said about the intermediate term, but we're still positive in the long term. Thank you. I hope you have a wonderful weekend, and I will talk to you in the next video.